Nigeria's consumer goods sector is showing signs of a turnaround after 2 difficult years, with new research projecting steadier growth and improving operating conditions heading into 2026. A new Outlook report highlights easing inflation and a more stable exchange rate as key support for manufacturers, while warning that pre-election risk and new tax measures could still pressure margins. Now, with firms expected to shift from price-led growth to volume-driven expansion, analysts say the big question now is whether the recovery is strong enough to withstand policy and political headwinds. Joining me now to discuss this in a lot more detail is Motunrayo Sowunmi, who is Consumer Goods Analyst at Vetiva Capital Management Limited. Good morning to you, Motunrayo.
Good morning, Abby.
You're most welcome to the Global Business Report.
Thank you.
Right. Well, let's begin with inflation dropping sharply in 2025 following the CPI rebasing, of course. But food inflation remains elevated. How should this divergence be interpreted as decisions are made for 2026?
Okay, so the first thing we see is that for inflation, just like you said, in 2025 it moderated. In 2024, we saw that an average inflation rate was about 33%, right? And then moving into 2025, it declined to 23%, right? And that shows that the rebasing had an effect on inflation. For food inflation, we saw that the average food inflation for 2024 was 39%. Moving into 2025, we saw that it declined to about 22%. Still elevated, but there's been an improvement. And part of the reason for it being elevated has been the insecurity we've seen. But going into 2026, what do we expect? We expect there to be an improvement in food inflation. And the first reason for this is that we expect increase in food supply. Why? Because we've seen how the government have come up with initiatives that are sort of improving the insecurity issues in food producing countries, one. And also there are ongoing initiatives for government, such as subsidizing inputs and, declaring a state of emergency for food security, which we also believe will drive a decline in inflation. Additionally, there's a news about how the presidency is involved in ensuring that this year Nigeria will become like a food secure country. And there was a news about Bank of Agriculture, BOA, right? Also stating their initiatives to ensure that this vision comes. And some of the initiatives include ensuring that, they strengthen the finance and ensure that there is more affordable finance for the sectors, because we know that manufacturers have been, experiencing such a decline in that area in terms of being able to get accessible finance, affordable one. So Bank of America is ensuring that part of their target is ensuring that they strengthen accessible finance, right? Also, we know that Bank of Agriculture, right, BOA, yes. Their initiative is also to ensure that they increase costs, staple food, increase the production of staple food. And so when we look at inflation as a whole for 2026, we expect a positive one. And if you take that back to the FMCG sector, we all know that once inflation is moderated and inflation comes in at a good print, it impacts the sector positively.
Yeah, certainly there have been quite a number of developments and projections as you highlighted there. But then looking at this chart, we also saw strong revenue growth across major FMCG companies in 2025, that is. What drove this rebound particularly, and can it be sustained in 2026?
All right, so the first thing, like you mentioned, there was strong revenue growth, and just in an analysis across our coverage companies, what we saw that there was an average revenue growth of 49% year on year, and that shows a huge improvement in their gross profit margins. And can it be sustained? First of all, what drove it, right? We saw that there was a bit of strategic price adjustment, particularly in Q1 2025 by these firms. And another thing that we also saw is that because of the moderation we've seen so far, we saw in 2025, that also helped consumers' wallets, right, as there was now increase in demand for this product. And additionally, in terms of these businesses and just showing how resilient they are, they also came up with, strategic initiatives to ensure that the demand for this product increase, such as route to market sales, right? So can it be sustained? Yes, it can be sustained because, like I said earlier, inflation this year is expected to do better, right? Of course, FX too, we know how the CBN is particularly interested in defending the Naira and what we've seen so far in the improvement in FX this year. So we expect all this to feed into them. Additionally, just to add, I know you must have heard about the news about the, the sachet, the ban of the alcohol sachet, beautiful. And one thing we know is that for the major players, they currently do not produce that. So that news, they would not get affected by that news. However, just like SWOT analysis, it presents an opportunity for them. Research showed that Nigeria is one of the biggest consumers of alcohol. So there's a ready market. So particularly, I'm interested in looking at the initiatives that these breweries will be able to come up with to just ensure that they feed into that market. And of course, if they're able to successfully do that, that would ensure that revenue grows at a fast pace.
Yeah, that would certainly be a very important segment to look at and basically zoom in lens into. And sustainability, as you mentioned, is also key. But we also see FBT outpacing, looking here, manufacturing despite high rates. That is this firstly real demand or just simply price driven?
All right, so the FBT, right, which is the food, beverage, and tobacco segment, just for those that do not know what that means, approximately accounts for about 1/3 of the manufacturing sector. So the manufacturing sector as a whole relies a lot on borrowing rates, and we saw that last year, because of the MPR rates still high, there were a lot of, talks about suggesting a decline just to enable them, have a better operating environment. But when we look at the FBT segment, which is under the manufacturing sector, given the improvements in macro conditions we saw last year, like I mentioned earlier, that helped the FBT, the firms in this segment, to be able to post better gains, right? Better profitability, help improve their cash from operations, right? So we saw that they relied less on borrowings, right? And rather using their, cash to generate more, right? And so yes, the second part of the question, following that.
Basically, is it a real demand or price driven?
Okay, yes. So like I said earlier, it's a combination of both, right? FBT segment, we saw that they increased their prices, right? Which helped them to post more profitability, and also in terms of demand, because of moderation in inflation, there was also increase in demand for this product.
And in light of this information, and I see you're already beginning to allude to where I'm going now, so let's look futuristically and look at different 2026 inflation scenarios. How will risk and growth evolve during this period? Of course, we're speaking prospectively, and what policy changes are needed to sustain it?
Okay, so in terms of growth, we expect all things being equal.
All things being equal, yeah. It's very important to state that. Yeah.
Exactly. We expect in terms of growth, right, for it to, continue giving inflation, better inflation we expect to see. CBN's outlook for 2026, FX rate is about 1.4 and everything. But something happened interestingly yesterday. So there was a news I saw about the CBN governor, right, Dr. Olayemi Cardoso, and he spoke about how, just warning people because there's been a lot of excess liquidity, right, and especially because the pre-election year. And the danger to the downside effect to that is that, once there is excess liquidity, that is going to begin to affect, like, in terms of instability in currency. So far, we've seen stability, but because of, the excess liquidity, he warned that, just being careful. If not, we are going to go back to where we've come out from. And definitely, if there's a lot of excess liquidity, it's going to affect FX. There's going to be currency instability. There's going to be inflation issue. And of course, that also means that, just seeing the ripple effect, that also means that in terms of MPR, we know how the CBN and the MPC, they ensure that they want to defend the Naira. So if there is that risk of FX, being unstable, what's going to happen is that MPR will most likely be on a hold. And if MPR is still high, it will also affect.
Right, so some very precautionary measures are very key here in light of, sounds positive outlook, but tread with caution, pretty much. If you joined us midway, I've been chatting with Motunrayo Sowunmi, who is Consumer Goods Analyst at Vetiva Capital Management. Motunrayo, I want to thank you so much for joining us, and we'll see you again very soon.